Guys, are we live? I think we're live. I think we're live. All right. If you guys can see me, say so in the chat. I want to see you guys. I think I finally got it. This is exciting. All right. Let's see. Anybody, can you hear me? Who's out there? Say hello. Yes. Jason Stone in the chat. You are seen. I love it, guys. Amazing. Oh, this was a long time in the making. Awesome. Feels good. My very first YouTube live stream. So, hey, thank you guys for attending live, and thank you to everyone who's watching this on replay. Amazing, amazing. This is long overdue. So, yeah, I just wanted to provide a forum for people to ask questions about all the things I've been studying and thinking about and researching for a decade. So Bitcoin in particular, also money in general, the economy, finance, investing, all that. So if you guys have questions, I would love to share with you how I'm thinking about the world, what I am doing with my portfolio, and really just, pass them into the chat, and I'll take them as they come in. I've also been compiling questions that people have been asking me throughout the week and throughout the years. So I'll start with those, and if I notice anything in the chat, I'll address them as they come in. So number one, I get asked this all the time: who determines the price of Bitcoin? Right. So Bitcoin is, it started at fractions of a penny, and now it's up to $10,000 a coin. And people ask me all the time, like, who sets that price? Right. It's not like a pair of sneakers; they charge $50 or $100. And the answer is there is no central entity. It's the free market. It's totally the free market. So if people really want Bitcoins, they'll be willing to pay more and more and more for those Bitcoins. And if people don't really want them, they're not going to spend that much. And the supply and demand characteristics of what people want just affect the price. It's a really beautiful thing. There's no government in charge. There's no corporation in charge. It's just people, and it's just what they want. So the fact that Bitcoin has survived 10 or 11 years, and the fact that the price keeps going up even after crashing, 50, 60, 70, 80%, sometimes 99% within a day and then rebounding, the fact that it keeps coming back from that suggests that it's probably not just a bubble. It's not just tulip mania, right? Because when tulips go up and they come back down, they stay down. And like Beanie Babies go up and they come back down. And so when something recovers from a gigantic drop like that over and over and over again, you kind of have to start to wonder, maybe it's actually worth something? And there are definitely some questions coming up, and I'll answer those about the long-term potential of Bitcoin and why it's worth anything at all. So, all right, we got a question in the chat. Ryan Kane, thank you, Ryan. What is the halving, and why every 4 years? Amazing question, and it's very timely because the next Bitcoin halving is like 2 days away, and it does happen approximately every 4 years. And the halving refers to the amount of Bitcoins that are released every 10 minutes will get cut in half. So some of you may know that new Bitcoins come into existence when they are mined, and I can explain what that is later. But it happens every 10 minutes. So originally, in 2009, every 10 minutes, 50 new Bitcoins were created. And those Bitcoins would go to one of the Bitcoin miners who essentially solved a math problem, to keep it simple. So 50 new Bitcoins come into existence every 10 minutes. And that process continues 24/7 around the clock without exception for about 4 years. And then the reward drops from 50 Bitcoins to 25. It gets cut in half. And we call that a halving, or some people call it a halvening. Okay, so it gets cut in half. So then it's only 25 Bitcoins every 10 minutes. And that goes on for 4 years. And then it gets cut in half again, 12.5 Bitcoins every 10 minutes. round the clock for 4 years. And in about 2 or 3 days, it's going to get cut in half again, down to 6.25 Bitcoins every 10 minutes for another 4 years. And that amount of Bitcoins, what's called the block reward, it's basically the new Bitcoins that are created every 10 minutes, that's going to continue to get cut in half approximately every 4 years for something over 100 years, something like 140 years, if I remember correctly. But it's not exactly every 4 years. It's actually every certain number of blocks, every 210,000 blocks, right? At approximately 10 minutes per block. But we don't know exactly when a block is going to be mined because it's up to one of the miners to solve the math problem. And we don't know exactly how long it's going to take, right? It might be 9 minutes, 10 minutes, 11 minutes. And there's even some wide volatility around that, sometimes 3 minutes, sometimes 20 minutes, because you don't know how long it's going to take. So I don't want to go into too many technical details, but we approximate every 4 years, but really it's every 210,000 blocks. And why that number? It's what Satoshi Nakamoto, the creator, decided. We don't know who Satoshi Nakamoto is. He's anonymous. So that's a fake name. It's not his real name. And since we don't know who it is, if it's an individual or two people or a team of people, we don't really know how much Satoshi, he or she or they, knew about monetary history, but we can assume a pretty good amount because Bitcoin was created to solve the problems that the monetary system currently in the world has. And I'll get into those in future questions. So 4 years or 210,000 blocks isn't necessarily a magic number. It's you kind of have to pick something, and it was good enough to keep the inflation rate of Bitcoin slowly decreasing over time, and that's just what he decided. So, all right, next question, Jason Stone. Recommendation is investing in low-cost indices across regions or classes as a path to financial independence. Okay, like conventional recommendation. Yeah, like the mainstream recommendation is definitely a low-cost index fund diversified across regions and classes. Yep, so like US, foreign stocks, emerging markets, exactly. As a path to financial independence. Okay, yeah. Why is it you recommend gold, silver, crypto rather than a more diversified portfolio? Okay, awesome question. So yeah, I will say that generally speaking, I agree with you that the conventional wisdom, the mainstream narrative, is to invest in low-cost index funds that are diversified across regions and different asset classes, like high dividend maybe versus growth stock versus that kind of stuff. Yeah, that is the wisdom, and I think the reason that is the prevailing wisdom is twofold. One, a lot of this wisdom was developed in the 80s and 90s when stocks were greatly outperforming gold and silver, and obviously cryptos didn't exist. So the roaring assets of that period were definitely stocks, and a lot of these theories were developed in that period. And also a lot of modern portfolio theory, and this might get into a really long answer here, but modern portfolio theory, which looks at the efficient frontier. So if you guys, I don't know if you guys have seen the curve. I don't want to get too technical, but it's based on assumptions like if you like the long run return of a stock, 7% a year on average, but sometimes it's more, sometimes it's 20%, sometimes it's 0, sometimes it loses money in a year, but it evens out to 7% a year on average. So if you're going to invest for the long term, like 30 or 40 or 50 years, stocks are a great choice. That's the narrative, and I don't disagree. I don't disagree with the numbers. What I disagree with is the assumption that goes into that. So one of the assumptions that goes into that model is that is ceteris paribus or ceteris paribus, all else being equal. That's a Latin phrase meaning all else being equal. So if everything is equal in the economy, stocks are 7%, unlike gold, which is less, and other investments which are less. However, it is never the case that all else is equal. Never, 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 never. It is never the case that all else is equal. Something is different. And if you're going to spend time looking at the economy, researching the health of certain companies or countries, looking at different asset classes, you'll find something is different than the average state of affairs. Something is going to be different. Something is going to be overvalued. Something is going to be undervalued, etc. So, what I'm about to say might sound like a joke, but I mean it completely seriously. If you fall into a coma and you have no idea how long you're out, and you wake up and someone says, okay, you just woke up from a coma, before I tell you what year it is, and I'm not going to tell you who's president, and I'm not going to tell you anything about the stock market or anything, you have to allocate your portfolio, go. And if you had to allocate a portfolio under those conditions, where you know nothing, yeah, something like 70% stocks, 30% bonds in these low-cost index funds, that's the way to go. And maybe 5% gold or 10% gold. Yeah, because you know nothing else. But if you know something about the economy and you know that ceteris paribus doesn't hold up, right? And it's not true that all else is equal, something else is going on, then you can sort of exploit those mismatches and figure out what's overvalued and undervalued. So that's what I'm doing now, and I'm looking and I'm saying, what's overvalued right now? What's undervalued? And as I look at the stock market, I say, man, these are at record highs, like the stock prices. However, the earnings of the companies aren't very impressive at all. And if you look at the PE ratios, the ratio of the stock price to the ratio of the earnings per share, they're at insanely high record levels. It's kind of bananas to wonder how they could get so overvalued. Then you look at the policy of the Central Bank of the United States, the Federal Reserve, and they say that the policy of quantitative easing, which was started in the last financial crisis, 2008, 2009, the policy of quantitative easing, when Ben Bernanke testified in front of Congress, he said, we want to inflate the price of stocks to create a wealth effect. This is what he said. This was the idea. And everyone says, okay, that sounds good. Let's artificially inflate stock prices so people feel richer. And when people feel richer, they'll go out and spend in the economy, and that will boost the economy. That was the plan, announced publicly. And that's what they did. And they had QE1, QE2, QE3. They printed money into oblivion and created all these like financial engineering incentives to just try to make stock prices go up. So if you were holding stocks the last 10 years or more, I mean, you did great. You did great. And they're still continuing to do it now. The question is, how long are they going to be able to do it for? And I think time is running out. I think a lot of people are catching on to the fact that this is total shenanigans, that the underlying economy isn't actually healthy. It's just a facade. It's like changing the rules. It's like changing the value of a touchdown from from 6 points or 7 points, right, to 20 points. We're just going to redefine it. And then your team's scoring the same amount of touchdowns, but you have way more points. You have double the points, triple the points. And it's like, well, your team didn't actually get better. There's no like quality. So I don't know if that analogy makes sense, but it's just this weird scorekeeping trick. It's not like the economy actually has grown in the last 10 years. And as people start to figure that out, they will probably not be so interested in buying stocks. They'll buy the thing that's undervalued, and that is gold, silver, and crypto. So that was a really long-winded answer, but I think it deserves the explanation I gave, because these important questions can't be boiled down to a single sentence. So, and I could talk about these for hours, any one of these questions for absolutely hours. So Jason, hopefully that answers your question. I think gold, silver, and crypto are extremely underrated. The reason for crypto is the reason I think crypto is so underrated is because it's still such a tiny, tiny asset class. It's in the price discovery phase still. People are still figuring out what these things are worth. And the major cryptos like Bitcoin, Litecoin, Ethereum definitely are worth way more as an overall asset class than the amount of money that's currently in them, like as a market capitalization, as the market cap. They're still very, very, very tiny compared to the size of the problems that they they are currently solving and that they're going to solve going into the future. I wouldn't say that's true of all cryptocurrencies because there are thousands and thousands and thousands of them. But the major ones, Bitcoin, Litecoin, Ethereum, are definitely undervalued. They're way cheaper now than they're going to be in the future, for sure. And in terms of gold and silver, likewise, they're not in the price discovery phase. They're just undervalued relative to these other prices. So, for example, if you compare the stock market, let's say the Dow Jones, and gold, like an ounce of gold, if you compare them directly, they've existed for a very long time. The Dow Jones has existed since 1896, I believe, and gold, obviously, thousands of years. So if we compare the size of the stock market, the value of the stock market as it goes up and down, to the price of gold as it goes up and down, you could ask yourself, how many ounces of gold does it take to buy a share of the Dow Jones, right? Not how many dollars, but how many ounces of gold does it take? And to answer that, you just divide the two data series, and you find that the value of the stock market measured it go up, no problem, just like gold goes up, just like the price of real estate goes up. But that's because the dollar itself is falling, right? So when the dollar falls and just drops off a cliff, everything else goes up measured in dollars. So if you really want to know what's overvalued and what's undervalued, you sort of have to cut out the dollar. And as we compare stocks and gold, let's say, we find that compared to the historical valuations, stocks are extremely expensive right now. So it's a great time to sell them. If you've been holding stocks, you could cash out now and still get a really nice return on your money since whenever you bought them. But gold and silver are extremely cheap. You can get a lot of gold and silver if you buy it right now compared to how many stocks it would have cost you to buy those ounces. And over time, that ratio is going to revert. And so that's sort of my investment thesis right now, that if I buy gold, silver, and cryptos, I'll be able to sell them in the future and buy a lot of shares of stocks or a lot of houses, for that matter, if you want to compare it to real estate. Okay, so long answer. Got a couple questions here that are a little bit shorter, which is good. Are all the Bitcoins currently owned? Okay, good question. Sort of yes and sort of no. So right now there are about 18 point something million Bitcoins in circulation. There will eventually be 21 million maximum. So there's about 18 out of 21 million coins in circulation. All of those 18 million are currently owned. Somebody owns them. Could be a person, could be an institution. It could even be a government, but if that's the case, it's secret. 2 or 3 million that will be created. They don't even exist yet, but as soon as they come into existence, every 10 minutes, they will immediately become owned by whoever mined them. So whichever miner solves a math problem every 10 minutes will get the newly created Bitcoins and become the owner. So yeah, I think that answers your question. Yes, all the Bitcoins are currently owned, the ones that have been created. Next question, what is a Bitcoin wallet and do I need one? What is a Bitcoin wallet? So the reason it's called a Bitcoin wallet is because it's analogous to a real wallet that you would use to hold your paper money or your credit cards or whatever you put in there. So it's a piece of software, generally speaking, and it's a piece of software that can go on your phone, it can go on your desktop, it can go on a separate device, kind of like a USB stick, or it could just be really a sheet of paper called a paper wallet. And the whole point of the wallet is to store your Bitcoins. And without getting too technical, really what you're keeping track of is a private key. So maybe I'm already getting too technical. Yeah, maybe I'll just leave it there. And do I need one? Yeah, if you want to use Bitcoin, you need a wallet, basically. So the wallet generally is a piece of software that allows you to communicate with the Bitcoin network. So if you want to send or receive your Bitcoins Your wallet gives you an interface with the rest of the Bitcoin ecosystem, so you can tell them, hey, I'm going to spend some Bitcoins now, or hey, I want to receive some Bitcoins from somebody. So maybe that question about a wallet, I could go into more detail down the road. I mean, that deserves its own dedicated couple hours to talk about wallets. But if you do, this kind of leads into the next question, which is, where do I buy Bitcoin and where do I spend it? You would for any software. Like if you're creating like a Spotify account, you just have a username and a password, and that's what you do on Coinbase. However, you also have to link your bank account. So kind of like you would PayPal or something like that. It's pretty straightforward. You do have to provide a government-issued ID so that Coinbase knows who you are. And yeah, so where do you spend your Bitcoins? Anywhere Bitcoins are accepted. You basically have to find a merchant that accepts them, but that's increasing all the time, Last I checked, which was, I mean, a long time ago, there were a lot of major companies that would accept Bitcoin for different things. Some airlines would accept Bitcoins when you buy a ticket online. Microsoft, Dell, Expedia, I think. There are all kinds of places, and big companies, and all kinds of little ones. There are tons of individuals in the gig economy that will accept Bitcoins to do all kinds of work, like digitally for you, sound, video, blogging, advertising, web design, so many things. So many people are accepting Bitcoin. And you could always just ask somebody. So if there's something you want, just say, hey, do you take Bitcoin? So yeah, really it's a whole range of things. And just connecting to the question from before, what is a Bitcoin wallet and do I need one? Where do I buy Bitcoin? If you buy Bitcoin on an exchange, they'll create a wallet for you. So you don't have to worry about how to create one. So that's sort of the simplest way to get started. There are much more complex ways of doing it. And everything has different trade-offs that could be discussed in the future. Next question. Should I lend my money to someone to buy Bitcoins for me? I think this is talking about the like the services that are popping up online that I will call scams. So that sort of tells you what my answer to this question is. No, you shouldn't do it. You should do it yourself. Yeah, I think the idea is there's all these services that say, oh, just send us your US dollars, and we'll invest the Bitcoin. We'll buy the Bitcoins. We'll somehow invest them, or we'll day trade them for you. We'll buy low, we'll sell high. We have a trading algorithm, a trading bot. We can double your money for you. We can double the number of Bitcoins you have. Don't do it. Don't do it. If it sounds too good to be true, it probably is. So I would say the best thing you can do is educate yourself on how you can do it personally. And one thing I'll say, a really, really, really important thing to think about is the future and sort of work backwards. And as it pertains to Bitcoin, every day that Bitcoin survives, right, not to mention the fact that it's thriving, but every day that it merely survives, the odds that it will continue to survive 5 years into the future, 10 years into the future, 20 years into the future, go up. So the longer it survives, the more likely it is to survive just as long into the future. That's called the Lindy Effect. It's just like, if a business has already survived 10 years, it's much more likely to survive 10 years going forward than a new business that started today, right? A new business that started today is not very likely to survive 10 years. But if it's already survived 10 years, it has a much better chance of surviving another 10 years into the future. Same thing with a country, same thing with a currency, same thing with a belief system. The longer it has already survived, the more likely it is to survive in the future compared to a new one that starts today or a younger one. So anyways, if we think about, okay, is Bitcoin going to be around in 10 years? Well, probably. Is a cryptocurrency that was just started last week, is that going to be around in 10 years? Probably not. right? And so if Bitcoin is probably going to be around in the future, do you think it will have more of an impact on your life or less of an impact on your life than it does today? I'm thinking more, right? I'm thinking more. I'm thinking it's going to be accepted by more businesses. I think more people are going to be using it. I think it's going to be talked about in the news more. I think it will have a higher price because it will have a larger market cap. I think there will be more people interested in it. There will be more people willing to trade their fiat money, their US dollars, their paper money for Bitcoin instead, and that drives the price up. And so if that's what the future is going to look like, and you sort of work backwards and say, well, what do I do in order to be involved? You got to start. You got to start at some point. And I'm not saying, you know, bet the house, bet the farm on Bitcoin. No, no, no. I'm saying start by educating yourself. Start by, you know, asking these questions. These are good questions, like where do I buy Bitcoin? How do I create a wallet? And that kind of stuff. And you know, maybe put $5, like literally $5 into Bitcoin, like some amount that you do not care about. That if it disappears, it's no big deal. And just start playing around with the technology. Just start like opening up your ear to like anytime someone mentions Bitcoin, you know, just what are they saying? You know, what are they thinking about it? Are they using it? Are they learning about it? What do they think? So I really believe the earlier you get started, the better. And I know I'm preaching to the choir here. To the people listening, you're already doing it. Like you're doing exactly what I think you should be doing. But maybe, you know, tell your friends and spread it out a little bit more and go on that journey together. Say, hey, you know, let's get a group of people together. Let's all buy $5 of Bitcoin, right? Or whatever it is. So I think, you know, anytime you learn something new, just like I'm learning how to live stream today, right? I'm learning something new. I'm learning how to edit podcasts. I'm learning how to do all these things. Anytime you learn something new, you're going to make a ton of mistakes. You're just going to make mistakes. So if you know that going in, you just don't risk a lot. Don't risk a lot of time. Don't risk a lot of money. Don't risk a lot of anything. And just make those little mistakes. And okay, then you can learn as fast as possible. Don't delay the learning. The mistakes are the learning. So I would say don't delay the mistakes. Don't delay the learning. Just get started now. And tying it back to that question, don't give your money to someone else to go buy the Bitcoins and stuff for you because you're not really going to learn. At the end of that experience, you're going to learn, I shouldn't have given my money to someone to buy Bitcoin for me. So anyways, just get going. All right. We got another one from Ryan Kane. If one were to get started buying crypto, would Bitcoin be the one to start with? I think so. I think Bitcoin is the one to start with. It's the one I started with. It seems to be the one that's most popular to get started with. And if I were starting over, I would start with Bitcoin. So I think that makes a lot of sense. And then if you were interested in going to a second or third crypto in the near future, I would probably pick Litecoin and Ethereum personally, and all three of those are offered on Coinbase, which is a very, very user-friendly service. And I would start with Bitcoin, and if you just really feel like, you know, jumping in, also Litecoin and Ethereum, but I wouldn't really go beyond that until you're comfortable, I guess. So you go at your own comfort level. But yeah, Bitcoin's a great place to start. Next question, I almost answered already. What do I need to know about the Bitcoin halving? Yeah, it's basically the amount of Bitcoins given in the block reward is cut in half. What else do you need to know about it? You know, some people wonder if it's going to affect the number of Bitcoins they're holding, and I think it's because a lot of trolls are out there on the internet saying, you know, how come my number of Bitcoins in my wallet is going to get cut in half? And that's not how it works at all. Like if you already have 5 Bitcoins, after the halving, you're still going to have 5 Bitcoins. Like whatever you have isn't going to change. It's just the block reward that miners get, which for those newly created Bitcoins, those newly created Bitcoins are going to be created half as often. And so that actually causes a ripple effect through the Bitcoin ecosystem, because that means Bitcoin miners, are not going to be as profitable. Because think about it, these are people, Bitcoin miners, they go out and they buy special hardware to mine Bitcoins, like special, you know, computing gizmos and gadgets. They have special, and it costs a lot of money. cooling systems, and so on, and security for their facility. If they have a dedicated facility, they might need special security and so forth. So there's all these costs that go into it. And they also have the cost of electricity, which is a variable cost that depends on how much they're mining. And their revenue comes from Bitcoins, right? So if they do a good job at mining, they'll get some of these Bitcoins that are newly created, and they sell them for whatever their local currency is so that they can pay for rent or property taxes and electricity and all this hardware and so forth. So if their revenues, if miners' revenues are going to get cut in half, a lot of them aren't going to be profitable anymore. So some of the miners will just unplug. They'll just stop mining. And that's going to cause kind of a ripple effect in the ecosystem, resets, and it's hard to say exactly what will happen to the price because of those forces, the price of Bitcoin because of those forces. But we know that the supply of Bitcoins is going to go down because miners aren't going to be able to sell as many Bitcoins because they're only getting half as many. So if miners are only getting half as many Bitcoins, the supply of Bitcoins on the market is going to go down. It might go down by half, but probably it'll go down by less than half. And that suggests that if demand for Bitcoins doesn't change and supply goes down, price goes up. So it's basic supply and demand. So that's something else I would say you should know about the Bitcoin halving, that it tends to make the price go up, but no guarantees. All right, another question that's pretty different. Do you think the dollar will be replaced by another fiat currency or something like a gold-backed SDR? Okay. Do you think the dollar will be replaced by another fiat currency or something like a gold-backed SDR? Okay. This is a tricky one. So first of all, what's an SDR? Let me explain that. An SDR is an acronym for a special drawing right. Special drawing right. And this is a type of money that exists. This actually is like world money. It's like world fiat money. And it's issued by the IMF, the International Monetary Fund. However, it's not given to individuals, it's only given to countries. And currently it is backed by a basket of certain countries' monies, like US dollars, euros, Chinese yuan are in there. I think Swiss francs are in there, but I'm not positive. I forget the exact composition. But the SDRs are backed by, SDRs are fiat backed by fiat. And so fiat, if you don't know, I should define that. A fiat currency, or a fiat money, is just a money that a government says, this is money. We're going to use this. And it's something that doesn't have intrinsic value necessarily, the way gold would. Like gold has intrinsic properties. But it's just the government saying, this is what we're using. And if you don't use it, you go to jail or whatever. If you don't pay your taxes, we charge you a fine, which are more taxes. And if you don't pay those, then we send you to jail or whatever, depending on the country. Maybe we chop off your hand or something. I don't know. But yeah, that's a fiat currency. Is just you use it because we force you to use it. We either put you behind bars or we inflict some other physical punishment on you at some point. So. So those are fiat currencies. So do I think the dollar will be replaced by another fiat currency or something like a gold-backed SDR? I think so. So here's what's happened throughout history. The US dollar was defined as a weight of gold at one point. And that was a form of sound money. And then we sort of reduced that amount, and then we sort of reduced it further, and then we basically said that the dollar isn't backed by gold at all. That was about 50 years ago. So now we have a fiat money. Before we sort of had gold and we had representative money. The paper represented gold. And you could go to the bank and trade them back and forth. Dollars were as good as gold. You could trade them back and forth. They were the same, essentially. Well, now you can't trade your dollars for gold at a bank. You have to buy gold using dollars on the open market, and you have to find another person willing to sell you their gold. And not everyone's willing to sell you their gold. I'm not selling my gold right now. I'm waiting until the price goes up 10 times higher. So anyways, it used to be at a bank you could trade it directly. Now you can't anymore. And so do I think the dollar will be replaced by another fiat currency or something like a gold-backed SDR? It's really hard to say. I think that we will have a new monetary system very soon. I feel pretty confident that it will be within the next 5 years. I have no idea if we're going to continue to use something called dollars. If we continue to use something called dollars, they'll be redefined. So the definition of the dollar will change, but the vocabulary won't. That's one option. I think it's pretty unlikely that politicians or central bankers go onto a gold standard willingly. That's something that the general public would have to force them to do, and we're just not there yet. There's not enough people who want that. I mean, I do, but there's not enough other people who do. So I don't think the dollar might be replaced by another fiat, or it'll be redefined, which is essentially like being replaced by a new thing. Although most people will be convinced it's still the same. A gold-backed SDR, I don't know. It's really hard to say. There are a lot of people around the world who are very suspicious of centralized control and the idea that one international monetary fund, one organization that's essentially above the law of just any country at all, controlling the monetary supply that everyone uses, it seems unlikely. They may try it. Yeah, they definitely could try it. But that's actually the reason Bitcoin was invented. It's a decentralized way to give the world sound money, not a centralized way. When you have a centralized way of giving people sound money, they do exactly what the United States did. It starts off like sound money, and then they change it. They redefine it, and they sort of start printing paper that represents the gold, but it doesn't. There's not enough gold there. They start printing way more paper than they have gold, and it destroys the currency. So that's what the United States has been doing over the last 100 years. That's what a lot of countries around the world have been doing. It's pretty much the only thing that countries do when they fall into this trap. So even if we get onto a gold-backed SDR, we'll go through the same pattern. It'll be backed by gold, then it'll be backed by less gold, then it'll be backed by no gold. And it doesn't really matter to me actually what the official monetary system is, because I put myself on what I think the best monetary system is for me and my family and my society. And that's what you can do too. So it actually doesn't matter what your government or what the world monetary system is. You got to pick the one that's the best for you. And I mean, I think it's sound money. Any any booming economy ever throughout history was built on sound money. Like the Roman Empire was built on sound money, and it collapsed because it debased its currency. The American Empire was built on sound money, and it is collapsing and has been collapsing because it got off of sound money. And like people still believe the myth that we have a strong economy, but the economy hasn't been strong for decades. It's all just creative scorekeeping. I mean, the reason that we have such crazy wealth disparity, the reason that there are even protests over the minimum wage, the reason anybody cares about the minimum wage, the reason that anybody cares about so many of these economic issues is because we have serious economic problems. And they've all just been papered over with like creative scorekeeping. So I don't know how the dollar will be replaced. It will be. It will be replaced by something very soon. I'm pretty confident it's going to be within 5 years. Could be next year, because time is up. So we will see. All right, another message in the chat. Jason, if a new financial system would be in place, why bank on physical metals or crypto, as those are undervalued in the current system? Okay, is the assumption that physical metal or crypto would maintain value? Okay, yeah, this is a good question. Why bank on physical metals or crypto as those are undervalued in the current system? Okay, yeah, so I'm trying not to give really long-winded answers, but I'm not succeeding. So I think this is going to be another long-winded answer. But it's an important question. It deserves a fair treatment. So my investment thesis is that physical metals and crypto are undervalued. Physical metals are undervalued for a few reasons. One, they're sort of just unloved. I mean, gold is like a very boring thing. It just sits there. But stocks are exciting, right? Stocks are exciting. They move all the time, and there's companies, and they've got CEOs, and they say things, and they do things, and they've got products, and it's fun. And they sometimes pay dividends. And so stocks are fun. That's what people pay attention to. Gold is like really boring. I mean, it just sits there. And so gold goes through for 5 years, 10 years, 20 years at a time. On top of that, we've been going through a period where a lot of traders, I'll say, who work at investment banks, have been actively suppressing the price of gold. And for a long time, this was a conspiracy theory by the tinfoil hatters. And then it came out a couple years ago that a couple traders at JP Morgan, I believe, were caught, and they admitted to manipulating the price. And 2 guys actually went to jail, believe it or not. So, no one on Wall Street, and they only admitted to manipulating the price for something like 4, 5, or 6 years, even though they implied and the evidence suggests that it's really decades. And the guys who went to jail were not CEOs. They weren't executives. They were guys in their 20s who were just on the trading floor. I mean, they were fall guys. They weren't orchestrating it from the top. So, so not only does gold naturally go through periods where it's kind of unloved and ignored, but also it has been actively suppressed lately. And it still continues to be actively suppressed. I mean, the evidence definitely shows that. And the gold price, if you go online and look, what's the price of gold right now? The price you're looking at is the price of paper gold, which means it's actually a futures contract to buy gold either 30 days out or at some point in the near future. You're not actually buying the physical metal and having it shipped to your house under those circumstances. And so the current price of gold is determined by the paper market, and the paper market, right, for gold, just like what we talked about for dollars, is subject to way more paper being printed than there is actual gold to back it. And last I checked, in the paper market for gold is something like 100, and I don't want to get it wrong, at least 90, I think 100, possibly even more than that, times the size of the physical gold market, which means that for every ounce of gold that exists, there's 100 ounces of paper gold being traded as if it's real. And these are people who think that they are entitled to get the gold later in the future, but it's just not there. Only 1 out of 100 people would actually get it. So, okay. So, anyways, the price of metals has been actively suppressed, even though it has been going up lately. If you look at the past 20 years, gold has outperformed the stock market, even despite all that. Even despite central bankers actively inflating stock prices through quantitative easing and other measures that they admit to publicly. This is what they told Congress. We're trying to inflate the stock market. So even trying to keep stocks super high and even trying to push gold down, they're still exerting pressure to just revert. And eventually they're going to. They're going to snap. I mean, eventually they're going to snap. And gold is going to vastly outperform stocks. And it has already started, as I've mentioned. So is the assumption that physical metal or crypto would maintain value? Okay, is the assumption that physical metal or crypto would maintain value? So yeah, so here's what I'll say about gold, and by extension silver, and also Bitcoin, and by extension Litecoin. So these 4 things, so physical gold and digital gold, which is Bitcoin, and their their sidekicks, silver and Litecoin. These 4 things, they are money. They're money. So I actually don't even consider them to be investments. I consider them pretty much the only way there is to save purchasing power. This is how I think about it in my head. So if I'm going to save money, right? If I'm going to go work, if I'm going to go do something and I get some money, someone pays me dollars, let's say, I think, okay, if I want to save, the way I do it is gold, silver, Bitcoin, or Litecoin. That's it. That's how I save. And now if I want to invest, I pick something else. Know that the way you can like check what I'm saying is the very obvious thing that the price of everything goes up, measured in dollars. Eggs, milk, houses, whatever. The price of everything goes up in dollars. And it's not because those things are changing. It's because the dollar's changing. The dollar's losing its purchasing power. Right? A house is a house is a house, right? A gallon of milk is a gallon of milk is a gallon of milk. Those things aren't changing. It's the dollar losing its purchasing power because we print so many of them. And so I don't sit in dollars. So I look at those as savings vehicles. And so yes, the assumption is that physical metal and crypto would maintain value. Yeah, and that's what money is. Money is a store of value. So if you want to store your value somewhere, you do it in those things. Now here's maybe the next question that comes to mind. But wait a minute, the price of those things could go up and down, right? The price of gold goes up and down. The price of Bitcoin goes up and down a lot. Correct. The price of those things goes up and down, measured in dollars. Measured in dollars. But if you measure your portfolio of gold in ounces of gold, right? If you have 5 ounces of gold and you look at the price every day, how many ounces of gold are my ounces of gold worth? It's going to be 5 every single day. Every day you look, still have 5 ounces of gold. Okay. Still have 5 ounces of gold. Still have 5 ounces of gold every single day. So the price of your gold measured in gold is not changing. And then if you want to look at the price of other things, like the price of the stock market measured in gold, like the Dow gold ratio, like how many ounces of gold does it take to buy the stock market? Well, you buy stocks when stocks are cheap, measured in gold. You buy houses. When do you buy a house? You buy a house when it doesn't cost you very many ounces of gold. So you just divide the price. If you want to figure it out, go on Zillow, find the house you want to buy. Okay, it's let's pick a number. 340,000. You'll see why I picked that number in a second. 340,000. What's the price of gold? 1,700. Okay, so divide the two. Oh, this house costs 20 ounces of gold. Okay, 20 ounces of gold, no big deal. Okay, wait a year. Okay, maybe the house hasn't changed, still 340,000, but the price of gold has doubled. It's $3,400. Now that house is on sale. It only costs 10 ounces of gold. The sticker price in dollars hasn't changed, $340,000. But how many ounces of gold is it? Well, it's half as many. It used to be 20 ounces of gold. Now it only costs you 10. Houses are on sale. Now's the time to buy houses. So that's what I'm going to do. That's how I think about buying a house. So I still don't own houses because they're very expensive. They would cost a lot of ounces of gold right now to buy. But ounces of gold right now are very cheap. So I'm buying the ounces of gold. And then when the housing price and the gold price kind of come back together, houses will be on sale. And so that's what I'm gonna do. All right, our cop below 22. Back to the overall economy. Given the incentives of most to continue inflating the value of stocks, what will it take for a correction to occur? How, when do you see it playing out? I.e., thinking along the lines of market can remain irrational longer than you can remain solvent. I love that. That's a great phrase. That's definitely true. Okay, so what will it take for a correction to occur? How, when do you see it playing out? And yes, the market can remain irrational longer than you can remain solvent. Yeah, I like that one. Okay, great question. So here's what I think. I think that the Federal Reserve, and even like the presidential administration, even Trump, right? Trump wants the stock market to go up. It's his baby. It's like, look how great the economy is. The stock market is high. See? Fine, whatever. I mean, like, it's illogical, but he can do what he wants. He's got a lot of people convinced. So I think and even in the upcoming election, I don't know if Trump's going to get reelected. I don't know if it'll be Biden. I don't know if it'll be someone else. But whoever is the president for the next 4 years is probably going to do the same thing and try to inflate the stock market, right? Because that's a proxy for the health of the economy. I mean, it's a terrible, terrible proxy. It made sense, 50 or 100 years ago, but now it's so manipulated that there's no connection between the level of the stock market and the health of the economy. It just doesn't mean it anymore. So I think here's what I anticipate will happen. All of the people that can affect the stock market, the stock prices, I think will continue trying to inflate it. And they'll probably succeed to a point. So there may be like big one-day crashes, but then they'll be reflated. The bubbles will be inflated once again. However, that's just nominal. That's just like the sticker price. That's like the headline. It doesn't really reflect the underlying reality. And what you're not going to see in the news or on the media or whatever, what you're not going to see is that meanwhile, behind the scenes, gold and silver and Bitcoin and all these, fringe assets are going to rise more quickly. They're going to rise more quickly. So if the stock market goes up 10% in a year, gold will go up 30%, 40%, 50%, 100% or more in a year. And so I think the stock market can continue to go up, actually. Yeah, I think the stock market can continue to sort of be irrational, or even if you call it rational, it doesn't really matter what you call it. I think stocks can continue to go up. I mean, conceivably, for sure. However, the goal of an individual shouldn't be to pick an investment that goes up. That shouldn't be the goal. Because on average, everything goes up because it's the dollar going down. So you shouldn't really try to just pick something that goes up. You should try to pick the thing that goes up the most, right? Of the choices, let's say I have 5 choices of assets. I mean, really, you have like thousands of things you could invest in. But let's say you feel comfortable. Okay, I would invest in stocks. I would invest in bonds. I'd invest in real estates. I'd invest in gold or silver. I'd invest in cryptos. Maybe I wouldn't invest in options. I wouldn't invest in the foreign exchange market. Maybe there's a lot of things I wouldn't invest in. I wouldn't buy like futures contracts on orange juice, or I wouldn't invest in oil. Okay, whatever. So there's a lot of things you wouldn't invest in. Of the things you would, the things you feel comfortable with, you say, okay, what do I think is going to go up the most? I mean, that's really the question. Not if I pick this one, will it go up? Nah, I mean, they're all going to go up, right? They're all going to go up, which is really the dollar going down. The question is, which one goes up the most relative to the others? Right? Because if you make 10% in stocks and I make 20% in gold, I did better, right? That's the point. Yeah, so let me see if I just answered that question. What will it take for a correction to occur? How and when do you see it playing out? Yeah, so... Okay, so maybe I'll just answer it more explicitly. I think the nature of a correction could be one of 2 types, and we'll actually probably see them both happening in a staggered fashion. I think the 2 types of corrections will be an explicit correction, where we actually see the price dropping, and it's like, okay, that is a correction. Stock prices. The other kind of correction will be an implicit correction, which is the one I just described. Like, oh, stocks are still the same, or maybe they're going up, but the real correction is that everything else in the economy is going up way more than stocks. And that's sort of like a hidden correction that people wouldn't see or think about, generally speaking. And I think we'll have a combination of the 2 happening sort of back to back. Kind of like in March, we had a correction. I mean, like enormous correction. And then now it's sort of back to where it was. But meanwhile, gold and silver and Bitcoin are up. So it started out as an explicit correction and then had a recovery. But meanwhile, during that whole period, was like a hidden correction of gold, silver, and Bitcoin going up way more. So I think we'll have kind of both of those happening. And, the question, how is it going to happen? When is it going to happen? it almost is like saying, what do I think the Federal Reserve is going to do? That's really the question. Because at this point, the markets are very strongly manipulated by our central banks, which is a bummer. But whatever. Okay, so I hope I answered that one. All right, so we're at an hour here. I mean, I could do this for another 12 hours. I could do this a long time. Maybe I'll aim for another 30 minutes. There's some more good questions I have here that people have been sending me during the week. So let me scroll through them. I've already answered some of them. Someone asked me earlier this week, if you were saving to buy a house right now, what savings vehicles would you use? And I think I actually answered this earlier. First of all, I am saving to buy a house. I'm actually saving to buy like 2 or 3 houses because ultimately I'd like to be a landlord. I'd like to be able to rent out a property to, Airbnb or tenants or VRBO or something like that in different geographies I like to live in or geographies I like to visit on vacation, and bounce around between them. That's what I want. However, I think real estate is extremely overvalued and I don't want to buy right now. So I'm saving my money in gold, silver, Bitcoin. And when the price of houses comes down, measured in ounces of gold, ounces of silver, Bitcoins, whatever, when houses essentially go on sale, that's when I'm going to buy my real estate. So, yes. A related question. Excuse me. Do you think having cash in the bank right now is a good idea or a bad idea? Should I buy U.S. Treasury bonds to reduce the risk of volatility in my portfolio while still getting a little bit of yield? Okay, nice. And this sort of this relates to what I just mentioned in terms of savings, and it also relates to the idea of volatility and yield. So I personally think having cash in the bank right now is a bad idea unless you have a very specific reason for it to be there. So I think generally speaking, this is a lesson I've learned the hard way, is generally speaking, it's a good idea to have a cash cushion to like stay liquid so that if an opportunity, if a personal crisis arises or an opportunity, an investment opportunity or something else, you want to be able to jump on it as quickly as possible. Sometimes it's the same day or that week. And if your money's tied up somewhere in an illiquid way, it's hard to respond to a crisis, and it's hard to seize good opportunities. So I have sort of so stubbornly given up all my cash, all my US dollars, put it into gold, silver, and Bitcoin, and then missed opportunities to either buy gold, silver, and Bitcoin at a dip or whatever. So okay, maybe I should keep a little more cash in the bank than I currently do. But that's a discussion for another day, I guess. It's sort of up to you, but here's what I'll say. For those of you who don't know, in I think 2015, in the United States, there were laws passed called bail-in laws, and you can Google these. I've actually read them online, so you can find the actual legislation and read what it means, and then tons of people are commenting about it and interpreting it. And so I've actually done that and looked at the actual statutes themselves. And these are called bail-in laws, and essentially what they do is they say that they clarify what an individual depositor is from the bank's perspective in a legal capacity. So when you go to the bank and you give them, okay, here's $100 to deposit it in your checking account, you think it's your money. When you do that, you legally are giving it to the bank. So now it's the bank's money. And essentially, if they're nice, they'll give it back to you. People find that hard to believe, and they say, well, no, it's mine, my name's on the account, blah, blah, blah. It's FDIC insured, so if the bank runs out of money or loses the money somehow, insurance will cover my deposit. And yes, that is true. However, in these new bail-in laws in 2015, the statute has clarified that a depositor is considered an unsecured creditor of the bank. So you've essentially loaned the bank money, you're a creditor, and the bank is the debtor. The bank is in debt to you. And if the bank goes out of business or goes insolvent for whatever reason, you are unsecured. That loan is unsecured. There's nothing backing it. Like when you take out a mortgage from the bank, if you default. Now, when you loan the money to the bank in a deposit and the bank doesn't pay you back, you have no recourse. None, legally. Now, that's been clarified. There's no collateral. There's nothing there. And it would fall to the FDIC. It would fall to insurance. But if you look at what the FDIC Insurance Corporation has in its DIF, Deposit Insurance Fund, you say, okay, well, how much money does the FDIC have relative to the size of all the deposits in all the banks in the United States? Well, it has less than $1 for every $100. It might even be as little as 10 cents. Which means that, okay, if just one bank goes under, it's probably not a big deal. But if we have a banking crisis and several banks go under at the same time, there is not enough money in the insurance fund to insure your deposits. It's just not there. And so if we think about a normal day to day, normal month to month, ceteris paribus, it's not a big deal that the insurance fund is undercapitalized. It's like any insurance fund, like fire insurance or homeowners insurance, flood insurance, whatever. It's very rare that every house in the country is going to get consumed in a fire at the same time. It's just not going to happen. It's going to be like one or two houses here, and then one or two houses on the other side of the country, one or two houses here. So it doesn't matter if the fund only has 1% of the funds needed to cover all the homes. It's no problem. The problem is, what if all the houses go up in flames at the same time? What if all the banks go under at the same time? And we've built a system where that is absolutely likely to happen. It'd be like building extremely flammable bridges connecting every single house to every single other house in the country, just super flammable. So if one of them gets caught in flames, all the neighbors' houses are getting caught too. That's our banking system. So I don't think it's a good idea to have cash in the bank. Let me put it that way. I actually think cash in a mattress, like under your mattress, literally, is probably better than having it in the bank. Again, unless you have a really specific purpose for it. Should I buy treasury bonds? Yeah, no, I don't think so. I mean, I don't. I sold all my bonds a while ago, a few years ago. It's just to reduce the risk of volatility while still getting a little bit of yield. I think the desire to get yield is a little bit misguided because ultimately you want to do kind of three things. Your portfolio wants to do three things. You want to maintain your purchasing power. You want to prevent losses. You want to prevent losses to your purchasing power, and you want to grow it. Those are the three things. So like preserve it, which is why I'm in gold and silver instead of US dollars, because one leaks while the other doesn't. Okay, so you want to preserve it. Then you want to prevent losses. You want to have downside protection. So if you're in the banking system, if it's digital, you're at risk because it can be taken from you digitally, which I think is becoming a larger risk than the risk of someone breaking into your house and taking your gold out of your basement or whatever. I think the risk of the electronic system is now becoming more dangerous than the risk of storing something physically. So you want downside protection, and I think getting out of all those digitally connected things is a way to do it. I know cryptos are digital, but you can store it. You can store your cryptos in cold storage, which are not connected to the internet. So that's how I store mine, and it's very similar to like storing gold in your basement or in your sock drawer or something. So you want downside protection, and you also want upside appreciation. You want to grow your purchasing power. And this is where I think treasury bonds are not a good way to do that, because there's almost a 0% chance you make money on treasury bonds. Almost zero if you bought them now. They yield so little that if you ever wanted to sell the bond for more than you paid for it, it would be almost impossible. No one would buy it from you. And if you wanted to hold it to maturity, well, you're giving up dollars now to get little bits of dollars, over time, and then eventually you get your principal back, let's say 10 years from now, if you buy a 10-year treasury bond. That just seems so crazy to me. I just don't know. I don't know why you'd trade your dollars now just to get 1% more back later. It just seems like a waste to me. The risk is so high. I mean, and Trump just threatened the other day to default on the U.S. Treasuries. I mean, I don't think he will, but he threatened to default on the U.S. Treasuries so that China doesn't get the money we owe them because China's being mean to us. I don't know. It's ridiculous. I wouldn't buy Treasury bonds, and I wouldn't focus on yield either. I think that's sort of like a misguided way of thinking about investments. And as you think about price appreciation or wealth, purchasing power appreciation, yield is sort of an illusion. As you get yield from something like a dividend from a stock or a coupon payment from a bond, you're getting more stuff, but it's sort of an illusion because it's not the only way to do it. So my investment thesis now is that gold or Bitcoin or whatever will double in price way faster than stocks will, even if you include like minuscule dividend payments or little coupon payments from bonds. So I think thinking about yield right now isn't really the best way to be thinking about investing. Okay, we got another one in the chat. Jason Stone, why do you think big name investors, pick your poison on who, they're all on record for it, shy away from physical metals or crypto? Good question. Why do big name investors, okay, so like Warren Buffett, for example, shy away from physical metals, crypto? Warren Buffett has called Bitcoin rat poison squared. And Charlie Munger, similar, and Bill Gates said, "Oh, if I could short Bitcoin, I would." Well, first of all, you can short Bitcoin, but I don't think he has. So there's a couple things I'll say. One is, yes, there are a lot of big name investors who do shy away from those things. Yes, that's true. However, I will also say that there are a lot of big name investors, billionaires with a B, who love these assets and who are moving to them right now. Just this week, Paul Tudor Jones, a billionaire, has come out and said, the most attractive investment I see right now is Bitcoin. Of all the investments he can find, he's the most attractive thing is Bitcoin. And the idea is, I think he used an analogy to a horse race. He said, which is like what I mentioned earlier, right? If you have like a handful of assets you're willing to invest in, you want to pick the horse that runs the fastest, right? Not just a horse that runs. You want to pick the horse that runs the fastest, as long as you're not taking on too much risk, and you can measure that in a lot of different ways. And so there are plenty of wealthy billionaires and really reputable investors who think gold is extremely attractive, silver is extremely attractive, crypto is extremely attractive. What I could do is grab some of those articles after the fact, and I can post them in a comment below this video on YouTube, and pin that comment so you guys can check it out, read up some articles and different opinions. But in terms of the ones who are against gold and crypto, what I'll say might sound a little conspiratorial, because it is a little conspiratorial, is I think that let me phrase it this way. There is at least one wealthy investor, at least one, who gets more from establishing a healthy relationship with central bankers and politicians than he would get from acting against them and focusing on strictly financial gains, if that makes sense. So and I think that's easy to imagine, right? That there are some wealthy people who would rather forego potentially good financial investments because of what they get, maybe special treatment or perks from the government and central banks, right? The upside of colluding with the powerful people is greater than the upside of betraying them, so to speak, and trying to go for financial gains. So I don't think that's a stretch to imagine that goes on. But then there are a lot of independent wealthy guys. So it's a good question though. Okay, let's say like 10 more minutes. And so if you guys have any more questions in the live chat, get them in now so I have time to answer them. And otherwise, I'll just see if there's another one or a couple good ones in the list I've prepared from the past week. Someone has asked, a lot of people have asked, what do I do if I can't afford a whole Bitcoin? It's already up to $10,000 per coin, and there's no way I can afford that. Good news, you can buy a fraction of a Bitcoin. So actually, you can buy as little as 1 penny worth of Bitcoin, and that would give you 100 Satoshis. So just like there are 100 pennies in a dollar, there are 100 million Satoshis in a Bitcoin. So you can split up a Bitcoin into 8 decimal points, 0.00000001. Right, you can buy a really, really, really small amount of Bitcoin. You could put a penny into Bitcoin. You could put $5 into Bitcoin, $10. So you can buy a fraction of Bitcoin. You can buy a fraction now, a fraction later, add them together, and keep accumulating until eventually you have a whole Bitcoin or whatever you want. So yeah, no problem there. There's a few questions I have here from people on Quora who have asked me to answer these questions. So for those of you who don't know, I've been writing on Quora. Well, last summer I wrote on Quora for about a month or month and a half in this space, the financial space and cryptocurrencies. And in less than 30 days, I became the #2 writer in Bitcoin and cryptocurrencies, which was amazing. I mean, super flattering. So just a couple of the responses I wrote completely went viral. I got 500,000 views across my articles combined in like 30 days. It was really awesome. So now people request that I answer questions for them on a regular basis. I get like 2 or 3 of these a week all the time. So I'll probably start writing on Quora again soon. And yeah, I just got to focus my attention somewhere and just keep going. So anyways, Prashant Basnet asked me, how did Satoshi Nakamoto add value to Bitcoin? How can one add value to coins or tokens that they develop? This is a really good question, and I could spend hours on it, but I'll give you a short answer here, which is Bitcoin solves a problem. And that's why it has value. That's the short answer. So yeah, anything is valuable to the extent that it solves a problem. So if you're really hungry and I bring you a plate of food, you might give me money for it, right? But if you're not hungry and I bring you a plate of food, you're going to be like, what are you doing? Why are you offering that to me? I'm not hungry. No, thank you. Right? So the reason you're willing to spend money or spend anything is because it solves one of your problems, whatever it is, or maybe 3 of your problems at the same time. So Bitcoin solves problems. Essentially, it provides us a monetary system that is decentralized, that there's no central authority that has control over it. There's no bank that controls it. There's no government that controls it or regulates it. It's completely decentralized. So it is the money of the people. And if we want to change a property of the money, like how many of them there are, or how quickly we can move them around, or plenty of other things, we have to agree together to do it. I mean, it's extremely democratic. And you could argue that's what money should be. Right? I mean, you could definitely make that argument. So Bitcoin solves a lot of really, really important problems. That's why it has value, and people around the world are starting to figure that out. The narrative in the United States and in like first world countries around Bitcoin has a little bit changed over the years, but now it seems to be like, oh, you can be a millionaire. Bitcoin's going to 10x, bro. Like it's going to the moon. We're going to buy Lambos. And yeah, okay, maybe, right? I mean, I think it's going to go up in price, but that's not why Bitcoin matters. It matters because banks and governments have abused the hell out of every monetary system they've created ever around the world in every country, always. Always. And it's just a question of how long does it take. Sometimes it's 20 years. Oh, sometimes it's 2 years. Sometimes it's 20 years. Sometimes it's 200 years. I mean, like in the case of the United States, I mean, it was a great monetary system for about 100 years, and then it's been slowly falling apart for 100 years. Okay, so how does one add value to a coin or token that they develop? Solve problems. You know, figure out what problems people have and find a way to solve them. That's it. That's how you do anything. That's how you have innovation. And deliver it to them cheaper than what they're willing to spend on the solution. So it's a good question. Abdu Rahman asks on Quora, is Bitcoin a viable hedge against inflation and fiat currency? Yes, definitely. So inflation in a literal sense means printing money. It means inflating the money supply in a literal sense. The way most people think about inflation is prices of stuff going up, which is the thing that happens next, right? After you print a ton of money, prices of things will rise to account for the fact that there's so much dollars or currency or money, so much money going around. So yeah, absolutely, Bitcoin is a viable hedge against it. So anything that's limited, even like gold, Bitcoin, even as that's a bad example. I was going to say toilet paper, but toilet paper isn't really limited. I mean, you can produce more, but it's harder to make more toilet paper than it is to make more currency. Like currency is just a keystroke. Toilet paper, I mean, you actually have to manufacture it. But anything that's scarce is actually a viable hedge against anything that isn't scarce. So yeah, plus you get the factors of adoption, plus you get the factors of a flight to safety, a store of value, obviously currency hedge. A hedge against currency inflation. Yeah, I mean, just about any factor that could cause Bitcoin to be bullish is bullish right now. It's a special time. It's a very special time. Okay, maybe 5 more minutes. Gerson Rocha on Quora asked me, what would happen if everyone knew what fiat money is? Oh, man. I love this. What would happen if everyone knew what fiat money is? I wish I could quote exactly a particular quote from Henry Ford from many, many years ago. He said, I'll paraphrase, he said like it's well enough that not one man in a million understands our monetary system, for if they did, there would be a revolution before morning. Yeah, so if everyone knew what fiat money, so yeah, I mean, I've been thinking a little bit lately. I mean, it started when I was younger, but I've been thinking about it more. Just the simple question of why, after so many generations, like my mother, my father, and their sides of the family have been in America for many generations. And I'm thinking, after so many generations, why is it that we still have to work 40 hours a week until we're 65 and teach our children to do the same thing? Like, why aren't we at the point where we've already saved like a house or 2 or 3? Like, why don't we have like plenty of wealth? And like, why isn't that true of like most families? And like, I started thinking about like, man, yeah, why? Like after like, let's say my great grandfather, I don't know, who knows, maybe built a log cabin. I have no idea. Okay, after that, like what happened to the cabin? Like why didn't the next generation just live there, and then they don't have to save up to buy a house? They already have a house, and so on, and all these things. And I don't think it's population, because I mean there's not. It's like the wealth has to go somewhere. The wealth has to go somewhere. I'm thinking like, where's the wealth all going? And the answer is it's stolen. Like, who owns most homes in America? The central bank. The Federal Reserve owns most houses in America via the mortgage. So they own most mortgages in America. So, I mean, it's so crazy. I mean, they've basically just been stealing from people. So if you don't pay your mortgage, the Federal Reserve takes your house, and then they sell it to somebody else. And then if that person doesn't pay, they take the house again. So they get all the money you pay on all your mortgage payments. Let's say you pay your mortgage for 10 years and then you default. Well, they've got all that money essentially for free. And then they're still going to own the house and, you know, sell it to the next person. So, yeah, it's just systemic stealing for 100 years. And so if everyone knew what fiat money was, they would know that they've been stolen from, and their parents and their parent, everybody for 100 years, since 1913, 1914, everybody's been stolen from every minute of every day. If you use dollars, if you have dollars in the bank account, if you have dollars in your pocket, you've been stolen from. And I think people would say, I don't want to use dollars anymore. And that would happen in every country around the world, because it's not just dollars, it's euros, it's yen, it's Chinese yuan, it's everything. And then what would happen? Oh, I don't know. Would we have a violent revolution? I don't know. I mean, I'm not really interested in, like, you know, taking a gun or a pitchfork to Capitol Hill. I mean, I'm not interested. There'll be a lot of people who do it, but I'm not interested in doing that. I'd rather just buy gold or Bitcoin and then use that. And if everyone figures out that fiat money is garbage, you know, merchants will stop accepting it. Like people who sell toilet paper, they're not going to want dollars for it anymore. They're going to say, no, give me something else. Either barter, you give me something that I want and can consume right now, or give me something that's going to hold its value. Give me something that is a store of value, which is real money, gold, silver, or Bitcoin. So that's what would happen. Yeah. So I'll leave it there. I hope that was very informative for you guys. And thanks for tuning in. Everybody live in the chat, Ryan Kane, Jason Stone, R. Coppola 22, and Schultz. Thank you guys. I really appreciate it. And to everyone watching this on replay, thank you for watching. If you do have more questions, you can ask in the comments section. Or you can send an email if you want to somewhatscholarly@gmail.com. And I think I'm going to do a lot more of these in the future. I might do them every Saturday at this time. But based on different feedback, I may pick a different day or a different time. So let me know what you guys think. If you want me to do another one, if the timing works for you, or if you want me to change it. And I'll figure out what works and somehow find a way to announce that. So thank you guys. Really appreciate it. And I will see you soon.